Well, hi there, smart traders, and welcome to another weekly market review. Francois here, your senior analyst and trading specialist from Of Smart Online Trader. So I'm here to take you through what happened during this week. We're going to have a look at some of the events and how this affected the market. Kindly, just before we do this, just familiarize yourself with the risk disclosure currently on your screen, bearing in mind that everything that we will be sharing, if we are looking at trades during this video, will be my opinion of the market and should not be taken as financial advice. That being said, let's have a look, starting off right here with our economic calendar for the week. And we had an absolutely massive week that took place following last week's string of rate hikes from the Bank of Canada, the European Central Bank. This week, we saw the Reserve Bank of Australia, the FMOC, and the Bank of England take action in tightening monetary policies. Australia's central bank stuck with a lower pace of interest and only hiking their interest rate by 25 basis points. Meanwhile, the Bank of England raised their interest rates on Thursday by 75 basis points, warning of a very challenging outlook for the economy. In the spotlight, however, was the Federal Reserve of America announcing their fourth consecutive 75 basis point interest rate hike on Wednesday, which absolutely devastated the market as we were anticipating a more dovish approach, or a bit of a pivot, if we can put it in that way, from the Federal Reserve. Powell, however, failed to deliver on this and he remained hawkish. So, meanwhile, we also waited for the non-farm payroll data that came through on Friday, and we saw that employers added 261,000 new jobs during the month of October, although they only expected 200,000 jobs to be created during the month of October. The only little bit of bad news that we got, which definitely gave the market a serious reality check, and we are going to have a look now at how that affected the market, was the fact that the unemployment rate changed from a 3.5%. Yes, they did expect it to go up to a 3.6%, but it went all the way to 3.7%. So how did this affect our market? What did this actually do during this week? Now, if we start off with the dollar index, we can see here that we had a massive bullish momentum during the start of the week. So the first 4 days, we had beautiful momentum here, gaining a total of 2.3% for the week. However, on Friday, we had a massive drop there, as you can see on your screen currently. And that drop was a total of 2.1%. And that basically caused that the dollar index finished nearly flat, as you can see there, basically closing exactly where we opened on Monday. Moving over, let's have a look here at the USD ZAR. USD ZAR, very similar. We could see during the beginning part of the week, USD ZAR had massive bullish momentum, shooting up all the way to that resistance level over there. Then on Thursday, we started to find some resistance. And Friday, after the NFP results came out, we had a massive 3.5% drop in this specific market, causing us to close 0.9% down for the week. Here we can see the Dow Jones, and now, as I'm saying, a little bit of a reality check coming into play during this week. So after last week's massive bullish momentum that we had last week, this week was the exact opposite. We started Monday down, Tuesday down, Wednesday down, Thursday even further down, almost back down to our previous support level here at 31,600. On Friday, though, we saw a massive comeback in the market, even to the later part of Thursday, and this caused the Dow Jones to close at minus 1.8% for the week. Moving over to gold, Gold had a bit of a sluggish start to the week, and as you can see, finding that support here at the bottom of our trend line here at this 1625 level, and then having this absolutely crazy spike on Friday, and that caused gold to actually finish the week, even though it had a bit of a slow start and lost some momentum in the beginning part of the week. We actually finished 2.3% up for the week in total. Our last instrument for today is oil, and here you can see the oil, unlike most of our other pairs that we looked at during this video, had a bullish week from the start. Yes, Monday wasn't its best, but Tuesday, Wednesday, Thursday we had a little bit of a pullback, and then finishing off the week super strong, closing at $92.4 a barrel, and that was a total of 5.4% increase on this specific instrument. So definitely some massive movements that took place during this week, and some interesting trades that we can be looking forward to during next week, should those key support and resistance levels that we also showed you guys during this video be broken. We can definitely start looking for some trading opportunities going forward in the next 5 days. Traders, I trust that you found this video beneficial. Should you want to get in touch with us regarding our services, our contact details are in the description below. So get in touch with us. And as always, may the force be with you. Cheers.